President Trump remains unhappy with the Federal Reserve for not cutting interest rates and continuing to run off its balance sheet, calling the Fed, quote, destructive and hobbling his negotiations with China.
We should be entitled to have a fair playing field. But even without a fair playing field, because our Fed is very, very destructive to us, even without a fair playing field, we're winning because the tariffs are putting us at a tremendous competitive advantage.
President Trump also expressed his displeasure with the personnel on the Federal Open Market Committee.
No, they haven't listened to me. And, you know, we have people, it's more than just Jay Powell. We have people on the Fed that really weren't, you know, they're not my people. But they certainly didn't listen to me because they made a big mistake. They raised interest rates far too fast.
So despite the Mexican and the Mexican immigration tariff deal, markets continue to forecast multiple rate cuts from the Federal Reserve this year. June down to 22%. It had been as high as 30. July, though, now 84%. That is up today from last week. So you can see it's more than just Mexico that has people thinking that the Fed's going to cut rates. 95% for September, 97% for October. Embedded in all that, put it all together, there's a 51% chance of 3 rate hikes by December. And just for the record, guys, the president in our CNBC interview continued to misstate the size of the U.S. trade deficit as $800 billion in 2018. It was $621 billion, goods and services. More importantly, he says the trade deficit shows countries stealing from the United States. Most economists, in fact, say customers and businesses give those countries money. Those countries provide goods and services in return. They do not see it as stealing.
Steve, a lot of discussion today about tariff tensions and worries pushing them dovish. Do resolutions push them hawkish, or do they keep them dovish because there's always the chance they come back?
So the people that the economists who I read over the weekend, Carl, were sort of sticking to their idea that they see the rate cuts because they say it's more than just this tariff deal or that tariff deal. Of course, they see the China deal or China tariff deal as potentially very damaging to the U.S. economy. But they say, look, you have the weak jobs numbers, you have problems of trade showing up perhaps in the economy and in the jobs numbers and a general weakening going on. So they're kind of sticking to their idea that the Fed cuts rates either way. Carl, there was a big discussion, kind of a back and forth in the reports that I read over what lesson does the president take from this Mexican negotiation. If he's emboldened that the tariffs worked, then there's concern that there would be more tariffs for sort of untrade-related items. But if, in fact, it was a result of pressure from Republicans in the Senate and U.S. companies about the negative implications or negative economic implications of trade, then maybe there'll be fewer tariffs. So there's a big question, and that's why when he said we did the deal in 2 days, that's potentially augurs for more tariffs in the months to come.
So whether it has anything to do with the president or not, Steve, I mean, clearly the view of the market, of Wall Street economists, is the Fed is closer to making a move to cut interest rates.
Yeah.
When is that going to happen?
July is the odds-on bet. But, Sarah, if you like, we have a little calendar that we can go through and talk about what happens here. One is you have the President Trump meeting perhaps in Japan, right? And then you have, well, you have the Fed meeting next week. Then you have the President Trump meeting. Then you've got a June jobs report, that's early July, and then you have a second quarter GDP report, and then the Fed meets in July. So if all those things point the way and kind of line up, then you probably get that rate cut in July.
And how big will it be?
It's a good question. I would say a quarter point at this point, but there are those out there who say it's a possibility the Fed does 50 as more of an insurance cut beyond just doing a quarter.
I mean, you gotta kind of laugh, because while it's totally unconventional what the president has been doing, going after the Fed for volatility and calling on them to cut rates, he was so out front of this story, maybe for the wrong reasons, but it seems like he's getting his wish. Right,
but you have to ask yourself the question as to whether or not the president himself created the conditions which are prompting the Fed to cut, whether or not if you didn't have these tariff issues out there, would you have the conditions in place for a rate cut? Would you have had a sort of garden variety expected slowing of the economy that did not need the Fed to reverse course, or would it have happened anyway?